How's it going, everyone? It's Sam. We just got done with the Hyliion third quarter results. I just got done with the conference call, looked through all the financials, and I want to go through why this conference call and why this third quarter earnings sent the stock down about negative 10%. So it's rebounded a little bit. It's at about negative 8% right now at the time of this recording. But I'm going to go through that. I'm going to tell you some of the highlights from this conference call and from the webcast. We're going to go through everything. If you guys like this, please leave a thumbs up. I really appreciate it. I had to wake up a little bit earlier than normal today. Also, if you want to support the channel in some way, you can check out the link down below to WeBull. Get 3 free stocks as long as you deposit $100. So right now, the stock is down to about $21.75. This was not the conference call we wanted, but it's a conference call we needed. Just kidding. That's a Batman quote. But I have my notes here from the conference call. We're going to go through the earnings right now. So these are the main points that they hit on in the conference call and down in the financials. They completed a strategic combination between Hyliion and Tortoise Acquisition Corp on October 1 that yielded about $520 million in net proceeds. So this is something we already knew, but it is something that's very important because if we do just look at their liabilities, this is from just the through September 30. So if you were just looking at this and you didn't really realize that we had gone through with this and gotten the $520 million in cash, this would be quite concerning. The reason I say that is we have about $7.5 million in cash and we had about $40 million in total current liabilities. So that $520 million goes a very long way. Now, the next thing they say, they installed 8 hybrid electric units in the third quarter for 2020 for 4 fleet-based customers. So they went over this in the conference call and in the webcast. They actually did one for CAT, also or CAT. They have 13 overall this year that they've actually been able to deliver, and they're expecting 7 more in Q4. So they're expecting to hit the number that they set earlier this year, which is 20 in 2020. Now they're still expecting everything to go smoothly going forward. They're expecting to hit 2021 numbers. This is something they hit on a couple times. And if you look at what that means, they're talking about not only production numbers, but they're also talking about the Hypertruck ERX. So that timeline is still valid. They're also expecting to hit the numbers that we have from the financial side for 2021. Now, they said that in 2020, they might not hit their $1 million in revenue because they are pushing out those revenues. They are not collecting right when they deliver. So that is something to be considered. Now, they did have a $9.1 million net loss for this quarter, but essentially we knew that they were going to be losing money. A lot of that is due to R&D, and they are expecting to continue to increase their revenues, which eventually down the line they'll actually be positive. Now, they signed an agreement with FEV North America to accelerate commercialization of the Hypertruck ERX. That's good. That's what we were hoping for. Now, one thing that is really important too is that they were not really impacted by the pandemic. They said that they were still affected just like everyone, but they continued to push through. They didn't really have any major issues that were caused by this pandemic, so they are still on pace to hit their numbers. This is very nice. After we had the conference call with Workhorse where they said that 36% of their workforce are out at the moment. So that is something that is very good. So down here you can see their breakdown of all their different expenses for the first 9 months of the year. They've had about $8 million in research and development, $3.7 in selling and general expenses. Loss from operations this year has been about $12 million. Now, they really did need this merger to go through because there was such a deficit and such a need for cash. So that was good timing. Now, looking forward, we have a couple things to look forward to, and I'll tell you why the stock went down here in a second. But we are still expecting the numbers to be hit for 2021. They did expect the shipment of their Hypertruck in 2022, and they were expecting all the prototypes to be done in 2021 towards the second half. So we are looking forward to being able to produce that. You know, overall, this conference call seemed really well put together in the sense that the management was really calm, really smooth, especially compared to some other companies where it seems like they're just really uncomfortable talking. I mean, it was very professional. I will say though, this was very short. This was about a 30-minute conference call on their earnings. It was very short, which, I mean, I would like to see something a little bit more. I mean, I think there were only 3, maybe 4 questions, one of which we kind of already knew the answer to based on they were asking about the Hypertruck components and who's making those and what kind of patents they have. So in case you're wondering, they do have all the software from Hyliion. That's what they have patents on, and they have patents on the hybrid and the Hypertruck, so that's good. But going forward, the reason that the stock, I believe, went down today is the fact that there were no new contracts announced. So Thomas Healy does not like to hit on contracts, does not like to talk about contracts until they're for sure. So we had heard everything else in this conference call, really, besides the financials. We had heard basically all the different contracts before this. They had talked about several that they're working with different clients on, and they did provide some guidance saying that a lot of companies are liking the fact that they're public right now. They don't really have to go out and drum up new business right now. Right now, it's more about just servicing their clients and trying to increase production. But this is still a long road ahead. I would like to have seen some contracts. I would have liked to see some big partnerships or something like that. You know, anything that got me excited about the stock, because it is still a very expensive stock when you consider that they will not have $1 million in revenue and it's a $3.6 billion company. That does make you pause for a second. That makes you consider the fact that, you know, their price to sales is very high. I mean, that's what, 3,600 price to sales ratio, and we aren't even hitting 1 million. So it is a very expensive stock, but we are looking at the next 5 years, 10 years. This could be a very good solution for their market, and it is an $800 billion a year industry. So if they can just pick up a small portion of that, that's going to be huge, and that's why people invest in them. So it's not exactly the news that we wanted, but they are just trucking along. Man, sorry for that. I need to stop giving those puns, but that is where we're sitting right now. That's why the stock is down about 7.5%. There's nothing that was electrifying the investors. Oh my gosh. Okay, I'm done with that. There's nothing that really got us excited as investors in this company from this conference call. I think a lot of people are those Robinhood traders that are looking for big earnings plays, or maybe they just don't want to wait 5 years, 10 years down the line. But that is really how you make money, right? Investing for the long term. So I think that's why the stock is down. Thank you for hitting the like button. Thank you for checking out WeBull. And if you want to see a video right here on my price prediction for Workhorse, definitely check it out. I just put it up yesterday, and I think it's going to be very valuable. Thank you guys so much. I really appreciate it, and I'll see you right here. Bye.